Right. Do we have Dustin Graham with us on the line? Dustin, would you mind joining me on stage here, please?
Hello,
Dustin, how are you?
I'm all right, thanks. I just spilled my water all over my desk.
Okay.
It's one of these cool things. Like I've been sitting here for 20 minutes listening so patiently, and then I knock my water over. So it's actually nice way
Well,
to start.
the good news is we can see you. We can't see the water, and your computer is still functional, so we should be all good.
Yeah, no, it's chaos. It's all over my pants as well. So it's a good thing this is not in person.
I was about to say, luckily it's a virtual event. We wouldn't have known any better.
Yeah,
Guys, Dustin Graham is with us today. He's one of the gurus of packaging and selling your company in South Africa. Their company Benchmark International is an absolute thought leader on the topic. So we've just asked Dustin to talk to us about the exit trends that they're seeing in the market at the moment. Is this a good environment to build for sale? Is this a good environment to sell your company in? Like what kind of acquisition appetites are we seeing? We're very keen to just hear what your market insights are, and we'd really appreciate some of those shares. Thank you.
cool. I wasn't sure if you were going to ask me questions along the way, Lo, if I'm just talking. So it looks like I'm just going to be talking. So this is in no real order, and I'll just blabber on and see if some of it lands. But I think I've only got 10 minutes, but if I were to try and distill it down, let's go to the state of the world over the last 18 months or so. I think M&A loves volatility. So, the whole sector, it just enjoys it when things are a little bit turbulent. In the beginning, though, in the beginning of COVID, which was this global pandemic story, that it wasn't just a South African thing. We've had South African issues before. I think maybe even the previous founders conference, I spoke about, the 2019 issues when we had, the elections, and Eskom were doing sort of enthusiastic load shedding, and we had a whole lot of problems going on there. That was a South African story. This global one is a little different, right? But certainly in the last 6 months, we have just seen a spate of deals come through. It's as though the bubble couldn't hold on any longer and it just burst. Cash had been accumulating globally for the pandemic or over the pandemic, and it's just exploded. And certainly, look, I can only talk from our experience, but we've done more deals in the last 6 months than we did in the 18 months before that. So it's really quite exciting to see. I want to tell you that that's across sectors. It's not necessarily across sectors. There have been ones that you would expect that have performed slightly better than others. I don't want to go into that. That's the tech and education, healthcare, SaaS businesses, the ones that you would expect, e-commerce, logistics, particularly last mile logistics. So those have been really prevalent, but we've seen activity across all the sectors, and particularly of late. So I don't want anyone listening to this to be disheartened by that. One of our process that we follow at Benchmark anyway is that we traditionally target the more strategic acquirer rather than just the financial acquirers. I think if we're looking at pure financial buyers or financial acquirers, yeah, they're looking at these super sexy sectors that, and they're looking ultimately for their exit. But the strategic acquirers are, they're there and they've built up these cash reserves and they're starting to transact. I think what's one big trend that I'm seeing is that South African corporates or large strategic buyers have caught up with their international counterparts like overnight. In other words, what I mean by that is the pricing methodologies and the M&A methodologies that have followed. We've always been a little behind, I felt. I've always felt that in comparing our deals to our US or UK office deals, it just seems that our multiples, as an example, were a little lower than those jurisdictions. But what I'm seeing anyway is that we're catching up, and we're catching up pretty quickly. My feeling around that is that I think strategic buyers now are kind of pricing these opportunities or these acquisitions through opportunity cost and rather through traditional metrics. Now that's really exciting. What I mean by that is it's a land grab at the moment. It's a rush to get hold of the new technology to grab market share. And we're seeing these large buyers, large corporates kind of just going, well, what is it going to cost us both in time and money to replicate what this new technology or whatever it is, what that's going to cost to replicate that versus what we can buy it for. Not necessarily what is that entity earning, and let's apply a multiple to it. So that's quite encouraging. And I think it sort of segues nicely into another trend I'm seeing, which is in South Africa in particular, I just want to talk around talent. And I think, look, that's a bit of a buzzword at the moment. Everyone's talking about it. Even there's a new M&A term, acqui-hire, that's been thrown around. Old guys like me have only just recently heard that, so I'm having to Google what it means. But I'm being facetious. But really what I'm trying to impart there is that everyone is looking for good people. I think if there's one limiting constraint that deals in South Africa have, it's retaining talent, and it's retaining leaders for these businesses as they are acquired and as they're integrated into the larger machines. So if I were to look at a trend or suggest a trend, then a lot of deal structures are now having to incorporate that. In the past, we always had to address a concern with our clients who were saying, but I've had my financial manager with me for 25 years, and I hope she will survive the transaction. I don't really want to do a deal if she's going to get kicked out because whoever's buying us has this big, accounting engine behind them or accounting department behind them. Honestly, we're just not seeing that anymore. We're seeing that acquirers are looking at management teams or all teams, the entire staffing complement of target companies, and they are desperately trying to create deal structures to hold on to that talent, okay, into that employee complement. So that's really encouraging, I think, for our businesses across the portfolio. In terms of other trends, I can't think of too many without too much time, but I think you asked me the question around value as well. And I want to say that value is not really impacted, but that would just be a lie. It is certainly the businesses that have are more, I want to say relevant, but that's the wrong word. I think businesses that are more sexy at the moment or are perceived to be more relevant are in short supply, and as a result, supply demand, they're just attracting higher multiples. But across the board, we haven't really seen a reduction in deal values. If anything, they've been uplifted. And I think that's basically because, overnight when COVID came upon us, and COVID is kind of old news now, we've caught up a little bit, but overnight the territories got taken away, and we could do a deal with an American buyer as easily as we could a local South African buyer on a South African target company. And because of that, it just kind of uplifted values across the board, as well as the cash reserves that acquirers are generally sitting on. So no real impact on value. A couple of changes to deal structure, but it's all good news.
Great, sure, Dustin. That's super interesting. If we have half a minute left, I'd love to hear kind of like exit value compared to revenue and exit value compared to EBIT. Like, what kind of numbers are you guys generally seeing in the market right now, or is it too kind of sector agnostic and too company specific?
No, if it's okay, it's actually, I'm smiling, but it's actually irresponsible of me to say that. Genuinely, it's irresponsible because it is so specific to the transaction itself that I would just be doing everyone an injustice to say that. If I do have 30 seconds left, I want to stress a single point though that I'm seeing in the markets, and hopefully this is helpful to the listeners or the viewers. Focus on being deal ready at all times. There's certainly another trend that's just come to mind now is we're seeing a lot of unplanned deals, a lot of sporadic or spontaneous deals. So all I can encourage to the viewers is just be deal ready. And that's the stuff that OCFO do, right? That's keeping everything nice and systematic in order, financials in all the rooms and all that. It's also being psychologically ready, okay? So it's about knowing what your business is worth, having that conversation with yourself, and being ready for when someone's knocking on that door, because it's coming, that you can quickly have that conversation and you're quite well versed in what to say and what to do.
Amazing. Dustin, great golden nugget to leave everyone with. Thank you so much for being here with us today. Good luck with all your great big deals. We'll keep our eye on the headlines, and good luck with all the good work.
Sure. Thanks, Lo.
Thanks, man. See you soon.
Okay, bye.